neighbors, welcome to the February 2026 How's the Market Update. This month I'm going to give you some general thoughts on what I'm seeing here in Birmingham and Homewood, and then we're going to look at this month compared to this time last year for both downtown Birmingham and Homewood. So let's go ahead and jump in. What I'm noticing personally before we get into the data, when I've been looking at comps and doing market analysis for sellers recent, I would say the majority of comparable sales we're taking into account when coming up with our pricing strategy. The majority of those, they have their sales price, but they also have closing cost concessions factored in. And that's a very normal thing to be a part of a real estate transaction, for the seller to agree to pay some of the buyer's closing costs or maybe write a check to a contractor. So there's a concession there, and the sales price isn't actually the net that went to the seller. But how many of those transactions include concessions like that is what changes depending on what the market looks like. And so I'm easily seeing more than 50% of comparables include a significant amount of seller concessions. So that's a general temperature gauge to keep an eye on, or to tell you what the market's like. Another thing is I've seen 2 or 3 listings that were on the market last year come back on the market just now. And that's not too crazy, but I do think that this spring selling season, we're gonna see not just the typical annual increase in number of listings, but we're also gonna be seeing plenty of listings that were on the market last year and didn't sell because the sellers didn't get the pricing correct, and are gonna be back on the market this year. So I would anticipate maybe an even greater increase in terms of amount of inventory that we're gonna be seeing this spring and maybe this summer. Not just annual increase that you see every year, but also leftover listings that didn't sell last year that are coming back on the market. And then lastly, we're seeing rates continue to slowly go down. I have several first-time buyers that are pre-approved and locked in well below 6%, closer to 5.5%. And I do think that's kind of a sleeper subject in terms of people talking about the real estate market. I'm not seeing people just trumpet that rates are getting pretty darn affordable, especially when compared to the average over the last 30-40 years. So I think first-time buyers, always the market they step into is their baseline, and that's what seems normal to them. But I think plenty of people who are sitting on a 3 or 4% interest rate, now that they can consider a 5.5% interest rate, I think there's going to be a lot of people that it makes more sense to re-engage with the market and maybe look at selling and buying. All right, so that's my general take. Now let's look into some numbers. For downtown Birmingham, last month we had 29 listings sold, very close to what happened this time last year. Our median sales price downtown Birmingham was $405,000. That's up about $30,000 from same time last year. Median sold price per square foot, $241. That is lower than this time last year. It was $255. So, and that was also the case in January. So far this year, getting a little bit more bang for your buck in the downtown Birmingham market, even though the median sales price is a little bit higher. So sale to list price ratio, 97.6%. This time last year, it was just about 1% higher, 98.6%. And on average, sellers negotiating down almost 3% from their list price on average. Now, median days on market last month was up to 43. That is a lot. It's almost double what it was this time last year. Average days on market is just about the same story, but that is a high number for median days on market. That is a slow moving market relative to what we've seen in recent years. And then sitting at 7 months of inventory downtown Birmingham. So that's Glen Iris and Southside, Highland Park, Forest Park, Avondale, and Crestwood. And then downtown, the condo market as well. So that's noteworthy. That is a squarely balanced market for sure. Now, Homewood, we have had more listings sold so far this year than this time last year, just 17 single family homes compared to 10 last year. But that was the same story in January, a little bit more year over year. Median sales price is down a good bit, right at $400,000 whereas this time last year, the median sales price was $557,000. Now, with such small number of units, those changes can be pretty dramatic, so I wouldn't take that too heavily. It's more so what we're going to see over the course of several months, but we're also seeing median sold price per square foot significantly down from this time last year, 251 versus 308 last year. In Homewood this past month, we saw an average sale to list price ratio of 102.8%. So on average, sellers getting almost 3% more than what they list the house for. Last year, we were under 100%, 98.7%. So the Homewood market moving a little bit more. When it comes to days on market, it's just about the same. Median days on market in Homewood last month was 6. This time last year it was 5. Average days on market is right at a month, and that's what it was last year as well. So not too much of a change in Homewood in terms of the speed of the market. Months of inventory in Homewood, 2.7 months. This time last year was 2.2 months. So in Homewood in general, not too much of a significant change year over year. But anyway, that's what we're seeing in downtown Birmingham and in Homewood. If you have any questions about what's going on in your area or anything you'd like me to touch on next month, I'm all ears, so please send me a message. I hope this was helpful. Hope everyone has an awesome rest of your February, and I'll talk to you again next month.